Hello, good evening, all. Welcome to the Taxpert Professionals webcast. Today, in this webcast, we are going to cover the IND AS that has been introduced by MCA very recently. A financial reporting system, as all of us know, supported by strong governance, high quality standards, and a firm regulatory framework, is the key to economic development. Sound financial reporting standard underline the trust that investors place in financial information and thus play an important role in contributing to the economic development of any country. As the world continues to globalize, discussion in convergence of national accounting standard with international financial reporting standards has increased significantly. The forces of globalization prompt more and more countries to open their doors to foreign investments, and as businesses expand across borders, the need arises to recognize the benefits of having commonly accepted and understood financial reporting standard. As we are moving towards the more dynamic economy, with our e-digitalization, with our Make in India programs, this is definitely a very positive move by the government in the direction of further strengthening India position on the world map. The forces of globalization prompt more and more countries to open their doors to foreign investment, and as businesses expand across borders, the rises to recognize the benefits of having commonly accepted and understood financial reporting system. In India, till now, we had the foreign. In India, till now, we had our accounting standard as regulated by the Institute of Chartered Accountants of India. The authority, the institute had been instrumental in making the standard more in consonance with IFRS, that's a global accounting standard. The preface to statement of accounting standard issued by the ICI itself says categorically recognizes the need of making the accounting standard in consonance with the global standard. What is the need of making the globalized standard? Why can't we just go with our own Indian standard, and why can't we can live with live with this? Now, the benefits of convergence with IFRS are many. For example, if there are to the economy, investors, industry, and the accounting professional. For example, to the economy, this move of the government of converging the IND AS towards our own accounting standard towards IFRS will make Indian markets make it easy for the Indian market to expand globally. The need for convergence increases. The convergence benefits the economy by increasing growth of its international businesses. It facilitates maintenance of orderly and markets, and also help to increase the capital formation and thereby economic growth. It encourages international investing and thereby leads to more foreign capital to the country. As far as investors are concerned, a strong case for convergence can be made from the point of view of investors who wish to invest outside India, outside their own country. Investors want the information that is more relevant, reliable, timely, and comparable across the jurisdictions. Therefore, it is very much required that there is a convergence between the global standard and specific. The industry, a major force in the movement toward convergence, has been the interest of industry, the industry is able to raise capital from foreign markets at lower rate if it can create confidence in the minds of foreign investors that their financial statements comply with globally accepted standards. With a diversity in accounting standards from country to country, enterprises which operate in different countries face a multitude of accounting requirements prevailing in the specific country. The burden of financial reporting is lessened with conversions of accounting standards. And to the accounting professionals, definitely conversions with the global standards always benefit the accounting professionals in a way that they are able to sell their services as expert in different parts of the world. The thrust of movement toward conversions has come mainly from the accountant in public practice. It offers them more opportunities in any part of the world if same accounting practices prevail throughout the world. Now, coming back to the IND AS, India had made the commitment towards convergence of Indian accounting standards with IFRS at G20 summit in 2009. In line with this, the Ministry of Corporate Affairs, the Government of India, previously issued a roadmap for implementation of Indian accounting standards converged with international financial reporting system beginning April 2011. In fact, in the of budget speech 2014-15, the Honorable Minister of Finance, Corporate Affairs and Information and Broadcasting proposed the adoption of IND AS. The minister clarified that the respective regulators will separately notify the date of implementation for banks and insurance companies. This is the why the Ministry of Corporate Affairs has notified Indian Accounting Standard Rules 2015 via its GSR dated 16th of February 2015. Accordingly, it has notified 39 Indian accounting standard and has laid down an IND AS transition roadmap for companies other than banking companies, insurance companies, and non-banking finance companies. Now, in today's webcast, we will be covering mainly the applicability to all type of companies. It has been made applicable. Obviously, when the change of this large scale comes, it is in the phased manner that the government brings the implementation. Similarly, in for the IND AS as well, the government, the MCA has prescribed a phased manner of implementation. They have given the window of voluntary application of IND AS with effective 1st April 2005 with 1 year comparatives. Once adopted, the IND AS cannot be revoked. So even if you are voluntary, you have applied, the company has adopted the IND AS voluntarily, it cannot go back and revoke its implementation. The company is not covered by roadmap to continue to apply existing standards, and the phase 1 will be applicable from 1st April 2016 wherever the listed company or unlisted company whose net worth is more than or equal to INR 500 crore and the holding subsidiary, joint venture or associate of these companies shall be required to follow the standards. I repeat here, in the phase 1, April, that is applicable from April 1, 2016, the listed or unlisted companies whose net worth is more than or equal to 500 crore, including the holding subsidiary, joint venture, associates of these companies, will be required to follow IND AS. Net worth of the company, how it is defined is required to be calculated in accordance with is standalone financial statement as on 31st March 2014, or the first audited balance sheet for accounting period which ends after that date. Accordingly, if any company's net worth is more than INR 500 crore as on 31st March 2015 as well, then it will also be covered in the phase 1. Now coming to phase 2, that is phase 2 is applicable from April 2017, and it is the it will be applicable to the listed companies or unlisted companies, of which it will be applicable for the listed companies. It will be applicable uh, where the net worth is less than 500 crore. That means for all listed companies it will be applicable effective 2017. Now for unlisted companies, it will be applicable whose net worth is more than or equal to INR 250 crore, but below 500 crore. So that's where we are coming from. First thing is that voluntary adoption is applicable from 1st April 2015. Second phase is for the companies which are listed or unlisted, but the net worth is more than or equal to 500 crore. The third phase is in which they are making all the listed companies compulsory to attend to adopt the standard. And for unlisted companies, it is where the net worth is more than or equal to 250 crore but less than 500 crore. And then the overseas subsidiary, associate, joint venture and other similar entities of Indian company may prepare its standalone financial statement in accordance with the requirement of specific jurisdiction. However, for group recording purposes, it will have to report its Indian parent under IND AS to enable its parent to present CFS in accordance with IND AS. And net worth, as I've already mentioned, is required to be calculated in accordance with standalone financial statement as on 31st March for the to be start with 2014, or first audited statement for accounting period which ends after the date. What we'll be doing that this webcast is a series of webcasts. There are a lot of changes that has come. There is a difference between the present accounting standard, and IND AS, and IFRS. So there are a lot of differences. There are a lot of carve out based on between IND AS and IFRS based on the requirements. For example, carved out they have in the way of revenue recognition, which definitely brings in a lot of changes in the way the industry is recognizing revenue now, and the way it will be it will have a lot of impact not only on the accounting but on the other segments of the business, including tax, including account, and the way the profits are being reported. So the best idea is to prepare for the adoption, and it will be required that the companies are educating, proper training is being given to the finance people in so that there is no hiccup in the implementation. Now with the definitely it's a process of implementation and there are a lot of difficulties, but there are also the opportunities which should not be missed at this point when we are doing the adoption for the first time. So the whole idea of this webcast is to bring in to the mind to bring in to the industry the importance of early action, appropriate action and timely action, so that difficulties can be sorted and implementation can be made easy and opportunities are tapped. This is a continuous series. It's a short webcast for today, only describing the applicability of IND AS, and we'll continue the series in which we will take each of the accounting standard every Friday at 7 o'clock, we'll have this webcast in which we will take each of the IND AS, we'll compare it with IFRS, we'll compare it with accounting standard, present accounting standard, and we'll dissect it, we'll bring out the opportunities that the company can have by adopting that. While adopting, even if it is compulsory, adopting it in a fuller manner, and the difficulties, and how at Taxpert we can help you doing that. Thank you. I hope this is interesting for you. Let us know, write to us in case you need further assistance on this from us. Thanks so much.